All right. Good morning, guys. It's Mark Forex speaking. I just want to say this. All right. In case you're seeing me for the first time, my name is Mark Forex, and I teach people how to trade in the financial market. All right. Uh, for starters. All right. Now, I received so many emails on my address that how do I do a proper top-down analysis? How do I do a proper top-down analysis? And that question is a very, very important question because if you don't know how to do it, then you are heading for something else. Imagine you buying when the trend is bearish and all that. So in this video, I'm going to demystify what top-down analysis is and how to do it. All right, including market structure, very important. I hear what I'm saying. Market structure, all right. Then we're not going to the proper top-down analysis. All right. So I will advise you. Maybe you've watched other gurus that call themselves gurus. All right, and they have shown you one or two things, confusing you, and pay attention to what I want to say. You don't need to follow someone who has bought Lamborghinis, but I believe that everybody has his own idea in this market. All right, an average forex trader, or if you tell someone that you're a trader, the first thing they will expect is to see your Lamborghini, but they forgot that those people that they are seeing actually started from somewhere. All right. Provided you have the knowledge, your limits will surely be surpassed. All right. So let's get to the video. I will share my screen with you guys, and then I will do a proper top-down analysis. I'll start with synthetics, then I'll go to crypto, and then I'll go to forex. It's still the same thing. All right. So let me share my screen with you guys. All right. Um. Okay. I went and pressed the wrong one. All right. So I will share my entire screen. All right. Okay. So welcome to my screen. Remember I told you that I'm going to start with synthetics. All right. So go to synthetics. So this is volatility 25 index. Remember, volatility is a 247 stuff. All right. It's a 247 stuff. It does not have an end. Forex closes Fridays, but volatility does not close on Friday. All right. So let's start again how I caught this trade. All right. Let's start again. Let me. All right. All right. Now, before I go, please pay attention because I'm going to justify what top-down analysis means. All right. So let me type it here. What is top-down analysis? What is top-down what analysis? All right. So that is what. Let me increase that a little. Oh, okay. Let me also um. All right. Let me take a rule and at least make it nice. Let me make that color a little bit. All right, now we are looking at top-down analysis. Now, before you can really understand what it means, because you don't have to complicate what it means. When you complicate things, you don't get. I hear what I'm saying. You don't get results. Now, before you actually understand or comprehend top-down analysis, you need to understand what we call time frame analysis. I hear what I'm saying. If you are a scalper, you don't want to do your analysis from the time frame. No, at most 1 hour. I hear what I'm saying. And then you can go to 5 minutes to take your trade because you're a scalper. You are not staying a longer time. I hear what I'm saying. From the at most the daily time frame, 4 hour, and then you take your trade on a 5 or 15 minutes. I hear what I'm saying. If you are a book, a swing trader, all right, you want to start from. I'm a swing trader, so I will start from. I love starting from the monthly time frame. So if you can decide to start from daily, weekly, and then you go to 4 hour and enter your trade, all right, and all that. So you need to understand the time frame that you're operating in. If you don't understand your time frames, then you may not be able to take trade. Now, just imagine you that is a swing trader going to take trade, taking a trade on the 5 minutes. It's not something that you should do. All right. So technically, we have, all right, types of traders. Please, I'm going slow because I don't want to just jump into technical analysis. I just want to understand. We have types of traders. The first one, we have scalpers. All right. The second one, we have day traders. All right. The third one, we have swing traders. The fourth one, we have positional traders. Positional traders. All right. So now, if you don't understand the time frame that all these traders are operating on, rather, you will not make money. People like Elon Musk, Jeff Bezos, and those people that trade, they hold trade for a very long time. They can only for 1 year, 6 months, 1 year. So those are positional traders. All right. I can also, take, hold trade for 1 year, 6 months. All right. It's just a kind of a sub of the positional trading. All right. Now, like I said, scalpers, your time frame to do analysis should be maybe even 1 hour time frame, and then you go to 5 minutes, take your trade. Day traders, 4 hour at most, 4 hours, 5 minutes, 15 minutes for entry. All right, swing traders, you do analysis on the daily, or I do from the monthly time frame, monthly, weekly, daily, and then I use 4 hours to enter my trade. And then this you can from the monthly, and then you enter on the weekly or daily time frame. All right. Now you've now known traders and their time frames. All right. The next thing I want you to know is this: is market structure. Market structure. Market structure. Because market structure is very, very important. Market structure. I'm taking my time now to explain, because once I go into the video, I may not come back to this again. All right. Now, market structure has been overemphasized. It's a very simple something. All right. We have three phases that the market moves in: either a downtrend, uptrend, or a ranging market. But I don't trade the ranging market, so let's take that out. All right. So I'm basically operating from the bullish bearish market. I hear what I'm saying. Now, what qualifies a trend as a bullish trend? What makes a bullish trend a bullish trend? Technically, gurus have concluded that if price keep doing this, right? If price keep doing this, then we are bullish, right? We are bullish. Then if price keeps doing this, then we are bearish, right? But now the question is, looking at it from this perspective, all right, it's not easy as it is on the chart. It is complicated on the chart, but in a normal drawing, it is very easy. But there's something I want you to take note of in this video. Once you get that, forget it. There's no structure not analyze. I hear what I'm saying. Or you cannot demystify. I hear what I'm saying. Give me a proper demystification of market structure. All right. Now, we know the uptrend, all right, in an uptrend. The market will need to be forming higher highs and what? Higher lows. Get that straight. Get it straight. But on what premise? On what premise will you have a higher high? And on what premise will you have a higher low? That is just the question. But now we are talking about a bullish market. Provided I'm concerned, what low is when rather rise a higher high to be called a higher high is when a higher low breaks a structure. You will not be seeing any low on the chart and be calling it higher low. No, 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 no. There are certain things we look at before we call that a higher low or a higher high. Technically, if you look at this market, all right, in a technical perspective, you know that this is a break of structure. So, all right, but take note, we may have a fake break of structure, which my next video. So if you have a break of structure like this, if this is a break of structure, all right, I think I have to make that a separate color so that you can see it clearly. All right. So if that is a break of structure, why are we calling that a break? You okay? If that is a then technically this is also a break of structure, right? But look at certain things. Now, what qualifies this as a break of structure is that this low here, should I? Okay, this low here broke this high to form this high here. So technically, because this guy has done the job by breaking this high to form this high here, this high here is now what we call a higher high, and then this high is now what we call what? A higher low. Understanding this will boost your technical perspective. So until this guy here is broken or violated, we do not have a higher high. Understand that. In fact, write this down. Until a higher low breaks structure to the upside, higher high is not confirmed. So now, because price has done this, we are now operating on a range from this low to this high. These structures you see here are what we call internal structures. So until price breaks and forms a higher high, just like this, you don't have any structure. Most of you here that are actually watching the video, we will call this guy a higher low. Fully aware that price just broke and retraced. I'm not talking pushing from here to here. No, no. I'm talking about the moment price, retraced. You guys will call this a higher low, but no, because to come and mess you up. I wish I'm saying something. So now, because price has given you a higher high, you are now operating between these ranges. So any market structure found here is an internal structure until this higher high is broken out. I'm going to somewhere. All right. Let me take out all this. All right. So hope you are getting the gist. All right. Please get this. If you don't understand this, you will not. You will just be gambling. You will just be gambling. You will just be gambling. Please take your time and watch the video. I want to in depth. All right. I want to go in depth of what top down is, but I'm just trying to break down what is a structure and what is not a structure. By now, you should know when a structure is a structure and when a structure isn't a structure. All right, that's broken out. You are not operating on the premise of these ranges, this guy, and then guy. That is your range. So whatever is forming here, we call them internal structures. Don't be deceived by internal. But now again, between ranges, you can have another range externally is violated when a candlestick closes above this recent higher high. If price push all the way to this top and close, okay, let me take it up and closed above it, right? So now this higher high, yeah, has gotten another higher high, which is this. So now you're operating on the now take note. You have to ask yourself this question: which, because this is a higher low, this is also what, a higher low. That's where the problem is. Which of them are you going to mark? Is it this one or this one that broke this high? This is also a break of structure because price has taken out that high. What we look at is the recent lowest low that break of structure. So this guy is now my higher low. Why this guy is not my what, higher high? So technically a range now between this range and this range. All these structures here are in structures. Next question again. Is this guy here a higher low? Is that this guy? Because after price broke this guy, we expect a pullback before we continue, right? So is this guy a higher low? Why? Because it has violated, it has broken structure. So we expect a pullback. Now, this pullback is a higher low yet until we break above this guy. Get this straight. So for now, I do not have a higher low yet. The only higher low I have, we have higher low here and higher high. We do not have another higher low, except price retraces and then breaks. Retracement is not that it is an higher low. It is when we break structure. All right. So that is for a bullish part. Let's move to a bearish. Expect a low to be taken out. So this is a break of structure. Is this guy here? Is this guy lower high? No, it is not. The only lower high technically is lower high because it broke structure. After expect what? A pullback technically. That's why you can see as price broke, price pull back. This pullback is not yet confirmed until we break this low here. And you can see that price took it out, right? So if price has taken it out, then I can call this guy here a lower high. And then I can call this guy what? A lower low. Because this low was formed on the premise of break of structure by this recent lower high. This guy is not a lower high. This is just a high. So we don't use that as a trade entry. So now on this premise, premise now, I'm operating between this high, all right, this high, and then this low. That is my range. So if I want to sell, you sell from premium and then you buy from discount. I will expect price to push up, all right, and then I will sell. So this guy here, why until it breaks what structure. I hope that is clear. If you're not subscribed, please do well to subscribe and then all right, you comment where you want me to explain. All right. So just understand this. All right, understand this before I move to a proper technical what analysis or top down. And so I've talked about market. I've talked about that. So let's move to what we have. What is top down analysis? Top down analysis moving is a process we take as traders to analyze the market from a higher time frame to the lower time frame. Because the big boys, the smart money are actually taking trade from the higher time frame. They look at what is happening and they can scale down and take it. So if they look at the market and it is bullish and you are selling, they'll use you as liquidity. Yes, you'll be used as liquidity. Now, let me let's assume you are a day trader, all right, and you to your let's say to the 4 hour time frame, and you saw price doing this. Once you see this, you will know that price is what bullish, right? On the 4 hour time frame, isn't it? Now you now move to your 15 minute. On the 15 minutes, remember that this is your 4 hour time frame. Price price has broken. Let me take this. Price has broken structure, yeah, on the 4 hour time frame, which means what bullish, all right. But after a break of structure, you expect back. Remember, this is your 4 hour time frame, all right. So if that is your 4 hour time frame, you now scale down to, let's say, your 5 minute or 15 minute time frame. But remember that price is pulling back. This pullback cannot be made clear to you as a day trader. But I'm a swing trader and I know what to do. So now on the um you know 15 minute time frame, this movement that you saw there on the 15 minute time frame, you'll be seeing things like this. On the 15 minute, it will be an entire downtrend. All right. So if you scale down to the 15 minute time frame, you will see it as an entire downtrend. Before this pullback will be setting, you need to see a shift in market structure, which we have here, and then price pullback. You expect that pullback. All right, we are too aggressive. We want to catch the bearish move, and then we want to catch what bullish move. So you can also short from here. I will move to the chart because um I don't want to do this here. You want to short, but mind you, the entire trend is bullish. At some point, it will flip. The entire trend is bullish, but now on the 15 minutes, you are seeing a bearish trend. Very soon, the buyers will come in, and that will be indicated on the premise of what a market structure shift. So let's move to the chart so that I will show you, um, you know, how to do it. Now, I'm coming. Let me just take out all this. All right. Remember, I promise you I will do analysis on three assets: synthetics, crypto, and what? And what? And forex. So now this is volatility index. What is the bias of this trend? The first thing, you remember on volatility, the highest time frame is in a daily time frame, which is um 24 hour. Let me bring this here now. Men looking at this structure. Remember, you don't want to move to start looking, start analyzing the market from far away this time. You want to look for the current, which is this, all right, the current structure. Now, what is the first thing you want to do? You want to see whether a high or a low has been taken out. You can see here that price from here pushed all the way down, came down, pushed up, came down, pushed up, and then price is falling. All right. Technically, for me, for me to say the price is bullish or price needs to take out a recent low or a recent high. All right. So I'll be looking for my higher low and what higher. Where is it on this chart? Price pushed up and formed this high, right? This high was formed. This was the low. This was the low that price made before price pushed up. All right. And price it out. Because technically we have a break of structure here. Right? We have a break of structure there. We expect price to back and then take out this low, but price failed. Price only came and you know stopped here and then pushed up again. The next thing I'll be looking at, if price should take out this guy, let me make that all right. Price should take out this guy, then I know that we are bearish. So now here that price broke this structure and pulled back. This is my recent lower high, and this my recent what? Lower low. Broken structure. But as price pulled back, price failed to take out this guy. So this is not a lower high and this is not a lower low. All right, it is not. All this structure between this high, this high here, and this low here is the range that price is operating from. So all the structure you see here are internal structures. All right. Now, so most of you will say we are bearish. Not agree with that. So on the daily time frame, you can see that price is just moving sideways. There is no clear direction of trend. All right. So since I don't have a clear direction of the trend, because all these are internal structures, most of you that are trading the ICT concepts, all right, you want to call this shift in market structure, pullback, and then price. But did price take out this low? No. So you don't have bias for now. If I move to, let's say, 4 hour, let me take out all this time frame. On the 4 hour time frame, what did you see? What did you see? You see why it's good to do your top down analysis? What did you? I'm seeing a break of structure. This guy was taken out, all right, with the body of the candle. You can see there. So if price has taken out that guy, then I can say that this high, all right, that led to structure is my recent lower high, and this guy is my recent what? Lower local structure. Came down. But did price break the structure? No. No. Right? But remember that we have gotten structure. All right? Because this your lower high and then this your lower. We expect a retracement to a premium level and then we can sell. All right? But I will not advise you to start selling from here. Why? Because as price came down, price should break this low here. Price should break this low, but price did not. So I'll be suspecting that a retracement is coming. It's coming. I can start looking for selling opportunities. If I move to the 1 hour time frame, you can see that push. All right. This was the downtrend we saw on the 4 hour time frame. But technically, you know very well, all right, that this is a market. Remember, I told you that price wants to pull back before you start selling. Yes, you are bearish, all right, but you don't want to start buying from from. So now that I have this, then that means this is my recent higher low. This is my recent higher high. If I take my fib, since I know that I'll move my fib up to that level. You can see that price is around this discount zone. Price pull back and then push up, came down, consolidated. I'm expecting price to push up, all right, because price is discount level. That was where we were on the four. Yeah, this point. Let me show you this point. So price is at a discount level. So selling from here is not advisable. You can see why the top analysis is very, very important. So market structure, I want to buy to a level, all right. I want to buy to a level, all right, and then wait for, and then I will start, selling because we are bearish. We are only retracing. So now, how should I enter this trade? After price shifted structure to the upside and pull back, you can see that price is operating on the premise of this level of resistance, which is a very powerful level of resistance. Resistance, support resistance, and resistance here. So for me to buy, I'll wait for price to break, retest, and then I'm buying. to where? To a level of um to a level of premium. The level, yeah. Remember that. Let me show you something. Remember that here we broke structure, right? So if you want to use your fib, since the break of structure here, all right, that is a break of structure. So to measure, take your fib, put it where you have that low to where price broke, push it here. So you want to be looking for sales around. Okay, I think I wrongly. So you want to measure from here down to that point, all right? You want to be selling from premium areas at most from this level between, and you can see that is a powerful level to sell from. So 1 hour time frame, you want to, all right, you want to buy to that point, this point, all right, you want to buy to that point. So I'm expecting price, I'm expecting price to break that level, all right, and then I'll buy.